Welcome to the Lend Academy podcast, episode number 191. This is your host, Peter Renton, founder of Lend Academy and co-founder of the Lend It Fintech Conference. Today's episode is sponsored by Lend It Fintech USA 2019, the world's leading event in financial services innovation. It's going to be happening April 8th through 9th at Moscone West in San Francisco. We're going to be covering digital banking, blockchain, financial health, and of course, online lending, as well as other areas of fintech. There will be over 5,000 attendees, over 250 sponsors, and registration is now open. Just go to lendit.com to register. Today on the show, I am delighted to welcome Johnny Reinsch. He is the CEO and co-founder of Qwil. Now, Qwil is a fascinating company. They haven't been around that long, but they're starting to get traction, and their business is all around providing advances for gig economy workers, typically freelancers, small businesses. They provide an advance so these people and companies can get paid immediately. So we go into that process in some depth, and we talk about how they underwrite, how they, the kinds of markets they're in. We talk about the performance of the advances, and we talk also about the challenges of the gig economy workers face in today's economy, in today's financial system. It was a fascinating interview. I hope you enjoy the show. Welcome to the podcast, Johnny.
Thanks, Peter. It's wonderful to be here. Thanks for having me.
My pleasure. So I like to get these things started by giving the listeners a little bit of background about yourself and what you've done in your career to date.
Awesome. Yeah, let's see. I grew up in a town called Fresno in the middle of California. I went to UCLA for undergrad and then UC Davis for law school, and took my first legal job in San Francisco. And this was at a firm called Kirkland & Ellis in 2008 or so. So right as 2008 was my summer associate job, and 2009 was when I started. But got to see a lot of really interesting things happen at that time, as you can imagine, especially centered around the financial markets. And it was a really interesting way to get exposure to finance in general, because we were sort of helping unwind a lot of some of the issues that had happened in the market around derivatives. I was an M&A lawyer that there wasn't a lot of deal flow, so I was helping out with a lot of bankruptcies and the like, and really got to see, what things about the market had precipitated the decline and ultimate crash, and what factors kind of led to that. So I did M&A for about 5 years, and then I decided that my heart wasn't in it. And part of this was from working on a deal where I really worked with and advised on, some phenomenal founder teams, both sell side and buy side M&A. And I always gravitated towards the mission of the companies. And in one deal in particular, the founders were so passionate about what they were building that they walked away from a very significant amount of money to go with a lower bidder on the deal, because they didn't agree with the deal terms, solely on the basis of a disagreement with the deal terms. And that was kind of a formative moment for me in realizing that I was looking for a similar path, where I felt so strongly about something that I could sacrifice a pretty significant amount of personal wealth in furtherance of my ideal. And I think I spent about another 4 months as an M&A attorney at that point before I landed a job at a client, actually, which was in the Bitcoin space, a company called Zappo, run by a phenomenal fintech entrepreneur, Wences Casares. And that's where I really got my exposure to how the credit system works, aside from what happened in 2008 and 2009, but how the credit system works in markets where there aren't, stable banking systems or stable payment rails and payroll departments and all the things that we kind of take for granted here in the US, which work pretty well. And was fortunate for that experience because, I'd found a founder that was very passionate about what he was doing, because he was trying to solve his own problem. And his problem was that while growing up in Argentina, Wences had encountered numerous points in time where currency controls and the devaluation of the peso essentially meant that he and his family, friends, etc., lost all their wealth, all their money, really because of the doings of a central government. And so I got the bug on financial inclusion through Wences and Zappo, and then ultimately helped build, the early days of the Bitcoin ecosystem with some strategic initiatives and some regulatory outreach before encountering the pain point that Qwil currently solves, which was my own run-in with our financial system in the U.S. So I like to call myself a recovering M&A attorney that learned about the credit system by seeing it essentially at its worst, and then coming in from the disruptor side through the Bitcoin angle.
Right. So then let's go back then and talk what was, I've read about this before. Tell us a little bit about the moment that led to the idea for Qwil.
Absolutely. This is, really it's fear. I felt visceral, palpable fear. And I'll talk about what I mean by that in a second. When, going through my professional career as an M&A attorney, growing up, I was, my parents were not wealthy, but, we never had concerns about, could we afford our house payment and the like. And so I was very insulated, frankly. But when I left M&A and when I was making far less money, I ended up freelancing quite a bit to help supplement my income. And there was 1 month where a client of mine didn't pay on time. And as a result, I was going to be, I had a mortgage payment due and not enough cash in my bank account. So I had 5 days or so before I was basically going to default on my mortgage. And I didn't really know what that meant. I'd never had anything like that happen. I just knew it was really bad. And as sort of the days go by and no payments coming in, this level of fear and anxiety continues to rise. And it's this, very physical sensation that you get when you're nervous, anxious, whether, you're about to jump out of the plane skydiving or you're walking on in a bad neighborhood late at night. We all know what that feeling feels like. And this feeling that I had as I got closer and closer to that date where my mortgage was about to be, the payment was going to be auto debited from my account, I was just living with that feeling constantly. And so I finally went to my bank and I go speak with, I have relationships with these people. They've known me and helped me with financial products for, basically from when I graduated law school. And I go speak to my team over there, tell them the situation, great client, they're going to pay. I don't know why they haven't paid, but they always pay. They're very high credit, and walk through all the different products they have with me. So my car loan at that time, my mortgage at that time, they see every student loan payment I've ever made that I've made. They have all my financial info. And, I asked, hey, what can we do about this? I'm really scared. And the response I got was that I should go look into payday loans or borrow money from friends. And unfortunately, Johnny, we're not your friends in this case. And I can't tell you how disappointed, scared, frustrated. I mean, it was such a big mix of feelings in that moment. And I just felt very much left out in the cold. And what was confounding to me ultimately when I got over my emotional response to this was they were in the best position to give me some kind of financial product. They knew everything about me, and something wasn't matching up with that narrative in my head of great FICO score, great credit history, tons of financial products with this institution, real problem, but can't do anything about it. Like they had a real opportunity to actually make some very low risk cash in that situation, and they didn't take it. So I started to really think about that and realized that, as a freelancer, as a small business owner, as you're sitting in our credit system in a bucket that's very difficult for our credit system to underwrite, or there is no underwriting guidance for it, or it doesn't make economic sense because, the dollar amount is so low. The credit system we live in that provides mortgages and car loans and whatnot really, really nicely for M&A lawyers doesn't really do anything for freelancers and small business owners.
Mm-hmm.
And started diving into why that is. And, just from that one, innocent little question of why did this happen to me? Me and my co-founders realized that one, I wasn't the only one, but also there's a massive need and opportunity to really provide a lot of value and help to these populations of folks that are similarly situated as I was at that moment.
Right. So then let's just move on then to explaining what actually Qwil does. What is your offering?
Qwil helps freelancers and SMBs get a payment that would be otherwise paid, let's say in 30 days. We give it to them today. And we do this by selling into the places that freelancers and SMBs are working for. So if you work for a large Fortune 500 company and that Fortune 500 company has Qwil available, when there's a payment that Fortune 500 company is going to pay you in 30 days, Qwil finds the data around that payment being owed at that time, mm-hmm. sends the individual that's going to get paid in 30 days an email saying, congrats, you're going to get paid in 30 days. And if you'd like to get paid today, we'll give it to you for, on average, it's about a 3% fee that's just taken off. So if it was going to be $100, we would say you can get paid 97 today. And it's really that simple. No fee if they don't do anything and they don't want to take the funds early, and a small fee that doesn't bear any interest if they want to take the funds today. Okay,
so then let's maybe give some examples of some of the places that offer Qwil, and so maybe some of the different verticals that you're in. Why don't you give us some examples?
Absolutely, and I'm glad you asked. In my situation at that moment, I was amidst and I self-identified as a freelancer. And so one of our earliest set of partnerships was with freelancer marketplaces. And I don't know if I'm allowed to name anyone, but, we work with all across the realm of skill sets. So we have folks that are drone pilots and work for drone marketplaces. We have folks that are delivery drivers and work for driver marketplaces. Software engineers that are freelancing in, those types of freelancer marketplaces, and design, et cetera. So we really cover a range of skill sets. And, anyone that's a freelancer in one of those marketplaces that we cover, every single time they have any payment that's been approved, it's going to come to them in the form of, hey, you can get paid today if you want, or we'll just push funds through to you on day 60 as well and incur no fee. And then we started to apply that model. We found we had a lot of success with that. And we realized that actually a lot of the volume that we have isn't from people like me that are looking to avoid a bad situation. It's freelancers and agencies, SMBs, et cetera, that they're using the capital to grow their business. And so we started to identify the verticals that would similarly sort of follow that narrative, because we really like the story of, if you take $1 from Qwil that's, going to get 30 days, going to be 30 days earlier than when you otherwise would get paid, you'll actually make more money. Then that's a wonderful story.
Right.
So we started to go into digital media marketplaces. So app developers and really anyone operating in these sort of publisher networks like the Apple App Store, Google Play are very well-known examples. And realized that, these small businesses are so sophisticated from a marketing perspective that the same kind of rules apply. If we advance them $1 that they would otherwise get paid in 60 days by Apple, they're going to make much more than, the fee they paid on that $1 by deploying that $1 today.
Right.
So that's another area where we've been quite successful.
Right.
And then we have a final vertical that we just broadly refer to as liquidity as a service, because we've been able to drop it into a bunch of different contexts. But really where you have any B2B payments ecosystem or, ecosystem where there's a technology solution that's facilitating either the exchange between a business and another business or freelancer, the payment flow between a business and another business or freelancer, we can, basically let that ecosystem leverage our tech they can continue to do what they're doing well. And we offer liquidity to that ecosystem broadly as just a part of their baked in offering. And so that's our liquidity as a service thing. And we've done that with ERPs, payment networks, invoicing networks, big vendor and supplier networks. Those are sort of examples of things we've done that in.
So really it's still all of those things, though. It all boils down to, sounds like it's one product. It's providing, an advance on an invoice or future earnings. So
yep.
just so I'm clear, though, if you're just say you're an independent contractor, like you described in your situation with your mortgage payment, you're an independent contractor and you've got some random company that you may have never heard of. Can you still get financing there, or do you really need to be hooked into the corporation providing the invoices?
Yeah, we have to be hooked in for now, and we do have plans to expand that, especially with, we get a ton of recurring use. In fact, it's staggeringly high. And so, we've built up relationships with a lot of the folks that are, using this as a new source of working capital. And, in the future, we'll definitely have options for going outside of our, immediate ecosystem. But for now, yeah, you do have to be working with a company or platform that Qwil's embedded into.
Right. Okay. And so then what are the dollar amounts that you're typically doing, and what's sort of the range and the average of the dollar amounts you're advancing?
It's about $1,000. And the beauty of the technology is that by essentially going from the top down, we've cut out a lot of the costs that are associated with underwriting or acquiring, a given customer. And so that means that we can do a $10 advance, or we can do $1 million advance. Ultimately, our machine and the way that we underwrite and manage risk and match, the advance with the lender that's actually providing the funding, that can be hyper efficient so that we can do tiny advances or very large ones.
Right. So you've got someone, like, you're embedded in with a company. There's someone who comes on and says, right, I'm whatever it is. Let's use an example. I don't know whether it's actually your client, but whether say it's a Lyft or Uber driver comes in and says, right, I want to get my pay now, and you're hooked into them. What actual underwriting do you do? Do you just, because if you're hooked into that company, wouldn't you? Maybe you just tell me what kind of underwriting you do.
Yeah, it depends. We could be underwriting a bunch of people. We could be underwriting a bunch of companies. So in the Uber scenario, we would probably be underwriting Uber and the driver on, do they have a high dispute rate? Is the ride likely to ultimately come back and say that, the driver was driving like a maniac and they want their money back? And let's take another example where, let's say we have, a designer that is going to be doing some work on behalf of a staffing firm that has a client that's a Fortune 500 company. The Fortune 500 company is ultimately the one that's, paying for the invoice. The designer is the one providing the services. The staffing firm is kind of making the market. We might underwrite everybody to get to the ultimate decision, and it happens very quickly, obviously, but to make the ultimate decision about price and try and get the best price to the freelancer in that scenario, we'll go to as many counterparties as we possibly can to get comfortable there.
Mm-hmm. And then once the company then pays you instead of paying the person who earned the money, is that how it works?
That's right. We are typically in the funds flow and we'll get paid back first. And then if there's, let's say, our designer they're going to get $100 in 30 days and they decide, okay, I want to take an advance inclusive of the fee on half of the amount. So they take 50. Mm-hmm. We would get the $100 payment from whoever the staffing firm client is or the staffing firm directly. And then we would just pass through whatever the remainder is to the designer.
Okay, so then I'm curious, because one of the great things about this business, now you haven't been in business that long, but these are really short-term duration types of advances. So you can get a pretty good idea how you're doing. I mean, you've had many turns on your book, even if you've only been doing it a couple of years. So tell us a bit about the performance of your portfolio.
Yeah, I mean, I'll talk about the turn first. Initially, it was average 7 days or something. And then as we've worked with more sort of high-end freelance and SMBs, the counterparty risk gets better, but the payment terms get worse. So it's sort of counterintuitive, but you've made it, as a designer, you just landed that contract to do design work with Apple, but then you find out that Apple pays you, 90 plus days in the future. So as we've worked with more counterparties like that, what initially started out as a week has trended to more like 30, 35 days. And we assume that it may land somewhere more like 45 or 60 ultimately. But the risk model and how we underwrite has performed very, very well. And we've had nominal defaults across the entire book and have been able to provide very competitive pricing for the freelancers and SMBs that are taking our offering, such that we ultimately end up being usually less than what a freelancer or SMB would have to pay to accept a credit card payment or use a payment processing platform. So that's been great. And the fact that we do have fast turning stuff and we are leveraging sophisticated underwriting to minimize the risk on default, it just ultimately means that we can push the best pricing back to our SMEs and freelancers.
Right. Got it. So then can you give us some sense of the scale that you're at today?
Totally. Let's see. So from a headcount perspective, because I think this is really interesting, we started last year with about 7 people, so 2018. And last year alone, we advanced $70 million to freelancers all over the world. And we're now about 25 and growing quickly from a headcount perspective and on pace to do a very large multiple of what we did last year. So we're still lean and mean. We're still leveraging tech in all the right ways to grow as quickly as possible and retain as little a headcount as possible, but also in the process of expanding headcount and whatnot to, make sure that we can deliver the best product to our global SMBs and freelancers.
Right. So then I read somewhere that when you were starting Qwil that you were turned down by investors, more than 100 times. And, when you initially raising money, and I know we got introduced through Ron Suber, who, pretty much every listener here would know. And, he's involved in your business, but maybe you could tell us how you got over that hump and, who are your investors?
Absolutely. It's funny when you're first starting, everything takes longer. And then, I woke up last week and we were featured on Fast Company's, most innovative companies, and everything moves way, way faster now. But, going back to that initial seed round that we raised, man, that was brutal. I knew that we were onto something big. I knew that our ability to make an impact in a way that would keep me excited and interested, effectively I'm kind of selfishly trying to solve the problem and the fear that I felt when I couldn't get help, right? But I knew that this was something I wanted to do and devote a lot of my life to, so that, the 300 million or so freelancers like myself at that time and countless, SMBs don't have to have that problem. We were going to need venture funding to do this in the right way. Fintech companies are hard. We're sending payments all over the place. We're advancing money out that is, from the capital markets and from our lending partners. And doing that as a small business or something less than a technology company is very tough. And so it was very obvious that we're going to go for VC dollars. That said, I'm a first-time founder. I had previously was a lawyer and had worked in Bitcoin. Like, there were all these reasons why, I didn't know anyone in Silicon Valley that was going to really back us at that time. So I had to do, I say 100, but it has to be more, frankly. And just to get the word out about what we were doing.
Right.
And then all the reasons why, you wouldn't back a first-time founder come in. And so ultimately we had to do tons and tons of meetings just to bring in, the first 500K or so that came in through plug and play and 500 startups. And then, it gets incrementally easier after that. And then it starts to move much faster. But yeah, it was a slog. It was really, really tough until we got the anchors from plug and play and 500. I was basically just doing meetings as my full-time job and getting told no a lot.
Right. That's got to
But
be, you've got to have the vision there, because that can be very demoralizing.
it was, man, even, I had full conviction that, I was seeing something. Me and my co-founders were seeing something that the market just had not yet seen and was not capable of seeing, because not everybody has felt this fear in the pit of their stomach
Right.
about, how am I going to make my mortgage payment? But it was tough. It was really hard. But then as we ended up finding, I'm glad I did that, because it introduced me to a ton of really helpful people. The team, Alareza and Mazrur and his team at Plug and Play Ventures, and Shil Manot and his team over at 500, which, Peter, I think is how we initially got connected, have been, incredibly helpful throughout the life cycle of the company and have become personal friends of mine. So ultimately we got a Series A done, about a year and a half or so after we did that first seed round, and have done a bunch of debt deals and have brought in amazing investors like Ron Suber and Sam Hodges from Funding Circle. So I'm very thankful, but yeah, it definitely was hard at the beginning.
Right. Okay. So then when you sort of look at what you're doing, I mean, it seems to me that there's a lot of people doing, obviously, factoring or invoice finance of some sort. Some are doing it online, and some are doing it in like for app developers in different niches. But when you look at your business, who do you see as your main competitors?
Yeah, I get that question a lot, and there are, as you mentioned, there are a lot of folks that do something similar. And I don't view us as competitive with a traditional invoice factoring company. I would actually view us as a complementary offering where, if you get the email from us that says, hey, get paid now or get paid 60 days later when, the company finally pays you, the small business that might use Bluevine or Fundbox or someone else to factor their invoice, they could also use us. Mm-hmm. And, we've applied an approach to customer acquisition where we can really leverage technology to embed in an ecosystem and, be alongside all these other offerings. So there really aren't a lot of folks that I view as just like us, though there are good examples of folks that offer sort of parallel services. And, Clearbank does advances to Airbnb hosts, and DailyPay does advances to freelancers and employees, and Earnin does advances for employees on, before the payroll runs. And, those are kind of the folks that I would put in the same bucket as us. But our approach is novel, and our use of technology and how we leverage technology is novel.
Right. So it sounds like you've focused on it seems like the gig economy workers seems to me like where you have really focused your energy, and that's sort of your primary market. And it's interesting because it seems like when I look around, I see it's massive and getting bigger, and people now talk about the fact that this is a whole shift in the way people earn a living, and some people are going to be earning a living as gig economy workers for their entire career, and they may have 2 or 3 jobs. But it just doesn't seem like that people there's not someone helping them along the way. Like you hear, I hear things like Uber are providing quicker advances down they could be, there are certain, these companies providing quicker advances, but it seems that the gig economy worker has kind of, from financial services perspective, they are now underserved, it feels like, and they're becoming the largest segment. Why do you think that? Is it just because companies move too slowly? Why do you think these gig economy workers are underserved?
Well, there are a lot of things that, this is a massive paradigm shift. And, by 2027, we'll have over half of the workforce that's working freelance. And that doesn't even account for the SMB population of, newly minted small businesses that, in my mind, serve as the backbone of the business economy. Everybody has to start somewhere. And so, yeah, it's a big problem. And I think on the pure freelancer or contractor, or however you define that term, because, everybody self-identifies a little bit differently, but, we're talking about, revamping a payroll process that has been, embedded deeply since, before the 50s, when folks stayed at their same job at, if you're really, really lucky, GE or something similar for your entire career, and then you retire rich with a pension. Well, that paradigm is shifting, and the infrastructure around it is not. Mm-hmm. And these are deeply embedded companies that have, long-standing histories and not a lot of incentive to really switch and accommodate a small dollar, much higher frequency type of existence in the form of your gig economy, your freelance contractor, et cetera, worker. So I think that's one reason. And there's also just a lag in the awareness from the financial services standpoint. Companies know this. Companies understand that to be strategic, to be competitive in the marketplace right now, you have to have, and it's called contingent workforce strategy. And that means you have to be able to supplement your existing workforce with the entire range of the talent spectrum in the form of folks that are willing to freelance, basically at a moment's notice, or that you're able to actually acquire and, get the right freelancer to work on whatever your discrete sort of security job might be, or something like that, where like the best folks in the industry actually will never work for you full time. They're going to be freelance. Mm-hmm. So companies get this, but financial services, I think there's always a lag on innovation on these fronts. And I give financial services a pass there because there should be.
Right.
Moving, large amounts of money into like new novel stuff might be bad, macroeconomically or systemically. And so I think that's one of the reasons, but I'm sure there are a host of others that I'm missing. But either way, there's definitely a massive opportunity for startups and founders, especially if you've had the pain point and you can weather the storm of getting rejected 100 times. It may ultimately be very much worth it.
Right. Well, we're out of time, but before I let you go, just like to get some insight into what this year holds. What are some of your goals for 2019?
Absolutely. I mean, my high-level goal is to just continue to solve this problem and to expand our impact in just the number of people that we can help. We're not quite at 100,000 of SMBs and freelancers that we've made it advanced to, but getting there pretty quickly. And I'd like to get that number as high as possible, in addition to just sheer dollar volume of folks that we can help. And then obviously the final bit of that is to make sure that we're embedding ourselves into new platforms and channels that are springing up all over the place, whether it's a gig platform or a freelancer workforce platform or an invoicing platform. The more of these things that we can embed ourselves in, the more people that get to benefit from our service.
Right. Okay, Johnny, we'll have to leave it there. It's a fascinating story, and wish you all the very best. Thanks for coming on the show today.
Yeah, thank you, Peter, so much for having me, and looking forward to seeing you at Lend It.
Yep, likewise. Okay, thanks, Johnny. See you. Companies like Qwil are taking an age-old problem and bringing it into the new world. And the reality is gig economy workers, they want to be paid immediately. They don't want to have to wait 30, 45, 60 days to be paid. And when you're looking at just like a 3% average fee, for them, that's not going to be too high a price of pay, I don't think, in many cases, where they can get their money, they can either put it to work in their business again, or they can make their mortgage payment or whatever it means. Because we're living now in this on-demand world, and this sort of 30, 45, 60-day payment cycle it just doesn't gel with the modern world, which is why I think companies like Qwil have a lot of runway to go, because they are providing this an on-demand payment in an on-demand world, and it really feels like that is what consumers want. That's what these freelancers want, and I think I see a lot of room for a company like Qwil to grow. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye. Today's episode was sponsored by Lendit Fintech USA 2019, the world's leading event in financial services innovation. It's happening April 8th through 9th at Moscone West in San Francisco. It's going to be the largest fintech event held in the Bay Area in 2019. We'll be covering online lending, blockchain, digital banking, and much more. You can find out all about it and register at lendit.com.